The housing market is doing better than me as my producers just chewed me out. Next. I have so many good articles today on the housing market and possible reversal, and I won't have my producer chew me out. Not on this video. Guys, welcome to Real Estate Daily. My name is Troy, and every day we go over the latest news in real estate, mortgage, and the housing market. Now, before we jump into it, hit that subscribe button. Boom, boom. We've been growing, but let's get the word out. A couple weeks ago, I told everybody it was time that if you were on the fence to jump in this market, and it looks like today I'm going to go over the reason why I was right. Let's jump right into it. All right, so this is CNBC, and this was actually late closing a couple days ago. It says housing market is now better shape than it was in 2008, says JP Morgan's Michael Ruhlhalt. And I've said this over and over. Guys, they get into a deep recession that people are talking about in the media on the housing market. It's just not going to happen. There's so many people on the sideline that still need to buy, and where inventories are near all-time lows. If you have no properties to sell and there's buyers on the sideline, how do you expect we're going down 20, 30, 40% in home values? Isn't going to happen. And what's the alternative? What is the alternative? Renting? Rents going up, outside of the C word that happened the last couple of years. Rents were going up 43, 6, 7, 8% on a year-to-year basis. Who wants to keep taking that abuse from your landlord? Next article. This is my girlfriend. So let's go ahead and move this up just a little bit. It says, mortgage demand is up as rates dip for the second week in a row. Actually, Diana, it's been 3 weeks. 3 weeks in a row, it's been going up. Why is demand going up? Because people are listening to me. I'm the crazy man, right? So look at the comments below. People are going, oh, you're a nut. You're crazy. I couldn't buy now. Mortgage rates are blowing up. Yeah, they blew up in October. But like I said, in November, things are changing. And it's not so much that the Fed's changing. It's the sentiment that's in the market right now saying, hey, we can see a little bit of crack in what the Fed's doing, even though they're not saying it so much, but we can see what they're doing. And now these mortgage companies who are trying to make any kind of money are now settling down the mortgage rates, which we're going to see here in a few minutes. Next article. And this is, the next two articles are about the same. Look at this. New home sales rose in October. Well, my girlfriend, Diana Olick, didn't she just say that the whole market's crashing and new home sales are desolate and they're going to bring the market down? That's funny. The Wall Street Journal, which doesn't have a very good reputation at this point, is saying that new home sales rose in October, boosted by higher priced homes. I wonder, we're in a housing recession, and this is the article that popped up from the Wall Street Journal of all companies and papers and media. But, excuse me, let's go on to the next one. Well, guess who else is saying this? Housing Wire. Here's why new home sales are up along with prices. And they're talking about it. Interest rates have come down. People's thoughts in the industry, the buyers are starting to say, yeah, it's making sense. It's making sense. I'm having lower interest rates and prices have dipped a little bit. And some of those sellers are having these beat up homes that nobody wants. And now I can pick them up for a deal. And so they're picking them up. This is why it's the good time in this quarter to buy right now. On the December 14th and 15th, the Fed is also going to come up, and they're going to have, on the next meeting, CPI is going to come out before then. So we're going to find out a lot of information. But if the CPI number comes in lower than 7.7, we're going to see a little rally going into next year in the housing market. And I think that we're going to see maybe short-term lived, but it will be a rally. We'll see. I'm going to give you my prediction next week on what's going to happen in December and possibly into January, February, first quarter next year. And again, some of the good news that I've been talking about, 30-year conforming rates, excuse me, getting over this little cold, nasty cold that keeps hanging around with me. It's probably because I got these comments, a few comments a couple weeks ago about housing market's garbage. But I'm breaking the chains, right? I'm breaking the chains. 30-year conforming conventional, it went down, about 3 basis points. We're going to get under that 6.5. You watch it, people. You watch under 6.5. And guess what 30-year FHA did? It broke out under 6.5. Now, are you saying, Troy, come on, man. It ain't going under 6. I'm not going to say that yet. You're going to have to watch next week. On November 30th, last day of the month, we're going to come out with our predictions for December and a little bit of futuristic predictions as well. Well, guys, thank you very much. Leave a comments below. If you don't like what I have to say, go ahead and slap me around in the comments. I don't care. If you agree or if you have your own opinion, I'm more than happy to listen to it. Otherwise, you guys take care, and I will see you on Monday.